It's FirstMark co-founder Rick Heitzmann. He's an early investor in another online sports betting stock, DraftKings. Rick, always good to see you.
Great to see you live down here.
I know,
it's
fantastic. So how should we think about the Flutter listing? Because oftentimes, we tend to simplify things. DraftKings will be the ATM for Flutter, vice versa. This is, all the money will go to either one of these two listings. Is that the way to think about it?
I think it's a validation of the market. And what you're seeing here is online gambling, either iGaming or online sportsbook, really growing in the market. Even there's 11 states live now. It represents several $1 billion of market value, and it's going to probably triple or quadruple over the next 3 years. And that's going to open up opportunity for everyone.
Rick, at 2022, DraftKings was trading $10. It was down. It lost, 80-some% of its value. The concern there was the spend to acquire customers. It was just an arms race. Here we are now. It's up 300%, expected to maybe hit GAAP profitability next year. Is the space led by DraftKings and the public markets about to hit an inflection point?
I think it did hit an inflection point over this last football season. If you look at DraftKings Investor Day analysis, they're projecting $1 billion of cash flow this year. So maybe not EPS positive, but they're driving their way to that, and they're still growing revenue 50%. So that was a baby, as an analogy we've used, that was thrown out with the bathwater last year. And Jason Robbins, the CEO there, has done an excellent job executing in light of the changing goalposts.
DraftKings, so Flutter comes $36 billion-ish. If you just do back of the envelope, simple math, if DraftKings had a similar valuation, you're talking about a company that should be twice what it is in terms of stock price. I understand it's not that simple, but to a certain extent, one has to think DraftKings is pretty cheap here. It
is pretty cheap. I mean, Flutter had a bunch of different things going for it, which gave it some optionality, especially in a thinly traded London exchange. But DraftKings had some ups and some downs. They were growing very quickly. They ran into early regulatory challenges. They went public during a difficult time, and now they've managed to overcome it, and the story is just coming to light. So there's significant upside in that stock.
How do you view the space in terms of the primary competitors to a name like a DraftKings? Would it be Flutter, or would it be a BetMGM or some of the regular,
It would be both those. There would be the landed casinos, and BetMGM is probably the biggest, who's getting into the online world. It would be Flutter and FanDuel in the U.S. But then they're also consolidating the back end of the market. Like any market explosion, you see all kinds of competitors coming in, and then the market gets organized. So you've seen DraftKings and FanDuel really capture market share, really understand what their customers need, reinvest in the product, and really grow that over the last couple of years. And that consolidation has occurred, and those are the two big winners, and they're going to continue to take tremendous share in a very quickly growing market.
But in terms of that back other half of the market that's going to organize, what happens to that share?
They're falling apart. So they can't keep up with the spend, they can't keep up with the product, they can't keep up with the regulatory, and they're either falling away or they're being consolidated into other places.
All right. Rick, good to see you.
Always great seeing you.
Rick Heitzmann.
Thank you.